The Federal Reserve, America's central bank, has decided to keep interest rates unchanged. This decision comes as President Trump's trade war continues to create uncertainty in the global economy. The Fed's main job is to keep the economy stable. They do this by adjusting interest rates. When rates are low, it's cheaper to borrow money. This encourages people to spend and invest, which helps the economy grow. However, raising rates can also be necessary to control inflation. Inflation is when prices for goods and services increase too quickly. This can erode the value of money and hurt consumers. The Fed is currently facing a difficult situation. The trade war is creating economic uncertainty and slowing down growth. At the same time, inflation remains a concern. This challenging economic environment has forced the Fed to take a cautious approach. They are closely monitoring the situation and waiting to see how the trade war unfolds before making any major changes to interest rates. This wait-and-see approach reflects the delicate balancing act the Fed must perform to maintain economic stability. The Fed's current interest rate target is between 4.25% and 4.5%. This is after they raised rates several times in 2023 and early 2024 to combat rising inflation. The Fed's decision to hold rates steady suggests that they believe the current rate is appropriate for now. They are trying to find a middle ground that will support economic growth without causing inflation to spiral out of control. Looking ahead, the Fed has indicated that they may cut interest rates twice before the end of 2025. This would bring the target rate down to between 3.75% and 4%. These potential rate cuts are in response to growing concerns about the negative impacts of the trade war. The tariffs imposed by the Trump administration have increased the cost of imported goods. This has led to higher prices for consumers and businesses, which could ultimately slow down economic growth. Lowering interest rates would make it cheaper for businesses to borrow money and invest. This, in turn, could help to offset some of the negative effects of the trade war. President Trump's trade war has been a major source of economic uncertainty in recent years. He has imposed tariffs on goods from several countries including China, Canada, and Mexico. These tariffs are essentially taxes on imported goods, making them more expensive for American consumers and businesses. The goal of these tariffs was to protect American jobs and industries from foreign competition. However, the tariffs have also had negative consequences. They have raised prices for consumers, hurt American businesses that rely on imported goods, and strained relationships with key trading partners. The trade war has made it difficult for businesses to plan for the future. They are unsure about the cost of imported goods, the availability of supplies, and the overall health of the economy. This uncertainty can lead to businesses delaying investments and hiring, which can slow down economic growth. The economic outlook for the United States is uncertain. Some economists believe that the economy will continue to grow, but at a slower pace than in recent years. Others are more pessimistic, warning of the possibility of a recession. A recession is a period of economic decline typically marked by job losses, business closures, and a drop in economic activity. Several factors are contributing to this uncertainty. The trade war is a major concern, as are rising interest rates and slowing global growth. Additionally, the Federal Reserve's efforts to reduce its balance sheet could also have an impact on the economy. The Fed's balance sheet grew significantly after the 2008 financial crisis as they bought bonds to help stabilize the economy. Now the Fed is trying to shrink its balance sheet by selling off some of those bonds. This process could lead to higher interest rates, which could slow down economic growth. The mixed economic indicators we are currently seeing make it difficult to predict the future with any certainty. The Federal Reserve faces a difficult task in navigating this uncertain economic environment. They must weigh the risks of inflation against the potential for slower economic growth. The trade war has added another layer of complexity to their decision-making process. For now, the Fed appears content to take a cautious approach, keeping interest rates steady while they assess the situation. However, they have indicated a willingness to cut rates if the economy weakens further. The coming months will be crucial in determining the direction of the U.S. economy. The outcome of the trade war, the Fed's actions, and other factors will all play a role. It is important to stay informed about these developments and their potential impact on your personal finances.